Trading 360. I'm Nicole Petalides. We are live on the floor of the New York Stock Exchange. It's time for the big three. Three stocks, three charts, three trades. Rick Ducat ready with the charts, here to take us through the trades. Kenny Polcari is here, senior market strategist, Slate Stone Wealth. Glad to see you, Kenny. Happy New Year.
It is a pleasure. You know, for me, it's like coming home when I come back to the New York
This
Stock
was your
Exchange.
place for most of your lifetime.
It's always a pleasure coming back.
So what are you saying about the market now?
So
How
listen,
are you feeling?
I'm still a little bit cautious about the market. I'm very curious about today's PPI number because while the estimates were high, and I'm not really sure why the estimates were as high as they were, because I thought they were fairly aggressive, right? So today when the number came out, it came in less than the estimate. So everyone goes, okay, that's great. Yet it's still up from last month, right? The year-over-year number, I think, came in at 3.3%, which last month it was 3%. So it's up over last month. It is below the estimate at 3.5. And then if you take out food and energy, it was 3.4. I think it came in at what, 3.6 ex food and energy, which was below the estimate at 3.8. So if you look at just the estimate, they go, oh, wow, look at this. It's great. Yet it's above where it was last month. So I think that's the part that maybe the market's just not getting at the moment, or maybe why the NASDAQ is still kind of stumbling around and is under some pressure today. And I know, look, when the number first came out, it was all exciting and futures rallied really hard.
Right.
But then they've pared back a little bit. And so I remain a little bit cautious. I'm in the camp that we get no rate cuts in 2025. And I actually think the risk is to the upside. Right, because I think if tomorrow's CPI number,
so we may get a rate hike. You think?
I think there's a risk that we do get a rate hike. Right. Right now, I think the market's pricing in a July rate cut, and then potentially another one later in the year. I don't think we're going to get one at all. I think, you know, and by the way, I don't think where we are that it's very restrictive. 4.5, 4 3/4. I don't. It's historically normal, and I don't see. And look, the labor market and all the other data points are telling you that the economy's in a good place. So I'm remaining in this camp of no rate cut.
Let's get to Pepsi, because you're talking about some names that have been, I mean, this one you said an ugly chart. It really, I mean, it went from 183 to 141, folks, so it's been hit hard. You did see that Wells Fargo has 155 equal weight, but I did see an overweight also earlier today when I was looking at this. Piper Sandler, overweight 171. Where do you think this could be headed and why?
So I think it's going back to 180. Look, again,
180.
It's ugly. If you look at the chart, it is ugly. It's down about 26%. It trades at a slight discount to its industry at 19.5 times versus 21.5. Trading a little bit discount to the S&P. And it's a big name. It's a large cap name in the space. It pays you 3 3/4% dividend, which is always nice. But it has broken down, which is exactly why I think as a long-term trade, that it's an interesting place to dip your toes, right? I think you have to be prepared if rates rise. Then look, all these dividend pays, they're great names, but they're going to still come under a little bit of pressure because, okay, it pays you 3 3/4, but yet if you can go out and get, 4.5 or 5% in a 10-year treasury, you may get some people that will do that instead. Or 4.5 or 4 3/4 on a 2-year treasury, right?
Right.
And so I think you have to be cautious of that in any name that pays a divvy, but one way or the other. Let's take a look at the chart. And again, I'm going to preface it, it's ugly, the chart.
Okay, let's hear what Rick Ducat has to say about the charts. Rick.
Yeah, certainly a rough road recently for this more consumer staple type name here. We can see, though, that for much of the past year, we had more of a triangular type shape here between our two blue trend lines, one starting with that high near 183.41, another starting with this notable low here around our earnings event in July. However, as we have said, the breakout was definitely to the downside here. We had our moving averages clustered very closely together, yellow 21-day, orange 63-day, purple 252-day, exponential moving averages. When moving averages start to, kind of migrate toward each other when they're right on top of each other, it suggests there's not really a clear trend. Either price has been so choppy that it's not really finding a direction, or the volatility is just kind of decreasing as the stock grinds sideways here. Low volatility can often be a precursor to high volatility. In this case, it played out to the downside, downward sloping channel between our two white dashed lines here. here, very close to those 52-week lows. The candle patterns have been interesting. We had our large red candle yesterday, formed a green harami candle, which was completely swallowed up by the previous day. Now we're on pace for another harami candle in a row. Today's small red candle completely fits within yesterday's green candle. So a sign of potential reversal here when you have these types of candles here. RSI not doing any favors though, still oversold, still very low here below that threshold of 30. Now, if we were to look at our volume profile and standard deviation channel studies, we can see that up here, 171, that's where all the big volume was. Before we had our drop downward here, we gave up this smaller volume node very recently. Now we're between the -3 and -2 channels here. -3 comes in at 140 or so, -2 comes in at 148. Those could be some areas to watch for potential support and resistance. By the way, 180 would be right about up here, up to those old highs. Seems like a reasonable place to look for resistance based on that repeated ceiling that we saw, Nicole.
Understood. All right. So he agrees with you. This chart ain't a pretty one.
No, it's not pretty.
But you are looking at that 180. Find a quick thought, and then we'll get to the next one.
Yeah, and listen, you just have to understand the role that it plays, right? It's a large cap name in the consumer staple space. They're diversifying their product offerings. They're getting the cultural stuff, and I think it's at a point where it's building a little bit of a base. And if you don't own it and you're looking for a name in that space, it might be a name to start to just dip your toes. And if it trades a little bit lower, then you dollar cost average. But I think it's at the 180 target on it. I think you have to be patient.
Okay. Now, do you have to be patient on this one that actually hit a high, then was going down, then had earnings, took another leg down?
Right.
It's been a tough few months. I mean, 3 months down 23% for AeroVironment.
Yeah.
Went from 236 to 165.
Yeah, I actually think it's closer to 30% it's down, right? So again, it's another ugly name. But look, it's in the aerospace and defense sector, and considering what's going on in the world, all the geopolitical tensions around the world, everything that's happening, and that it might be a good play in the sector. It's also, look, the government is one of its biggest, the Defense Department of government is one of the biggest clients, and so I think that it's another opportunity, only because it's big on sale. It's traded down. It seems like it's building a base at the 160, 162 range. It's got a $225 target on it, which would represent almost a 35% increase from where it is today. And I like the space, aerospace and defense.
All right, so let's see what Rick says about the technicals. Rick.
Well, things were looking pretty good from the lows to the highs that we saw. We pretty much doubled from this point all the way back here, 119.47. Our high point was 236.60, and then we started to really kind of fall apart. Notice that as the RSI crossed into that overbought area, it just wasn't able to really hang on there, and we had a pretty sharp reversal here. We broke through our blue trend line here that connected these lows all the way down here. Kind of a messy trend line, not really lining up super well, but August 5th was kind of an outlier day for so many stocks, so we can at least consider that mitigating factor here. But nevertheless, big gap to the downside after this earnings event that we saw. Sideways consolidation in recent weeks here. Our best close came in here at 168.80, and we haven't really managed to make it much progress beyond that point. Still, we tested that level today. Price is moving above the yellow 21-day exponential moving average. RSI is getting close to possibly making a bullish breakout above that 50 midline. Notice as well that we had RSI showed some improvement. We came down to a similar level, but we had RSI that was much higher, and it was not oversold as well. So when we look once again at our standard deviation channel studies and volume profile, we can see, Kenny was discussing perhaps forming a base around 160, 162. That's about where the point of control is for volume profile. The most heavy trading around this area at these depressed levels could be that, suggesting that people are willing to make a play here. So if we start moving lower, green line here, repeated lows, 152.88, so around 153. Then we've got our -2 standard deviation channel near like 147. So 153, 147 to the downside. To the upside, we've got our ceiling, our 252-day EMA in purple, and our -1 standard deviation channel, all between like 169 to 171.50 or so. 175.63 would be that standard deviation channel. But the moving average and the highs are much closer. That could be a breakout point and eventually fill the gap near 192, Nicole.
Okay. Look, where do you think this could be headed here? Because, by the way, they did get some good news pertaining to the Army contract. They had a competitor who was actually, protesting.
Right.
And that protest has now since been denied. And that's good news for AeroVironment. They make drones and missiles and things like that.
Unmanned
aircraft. So it's at 166. Where do you think it could head?
Yes, so I'm looking at 225. I think it's got that.
Okay.
That's really the price target. The street's got that price target
Yeah.
at 225. It seems to make some sense for me. I think, like I said, it's an ugly chart. It's broken down a lot, but I think it's in a space that I like. And if you're looking for exposure to that space, it might be a name to consider.
All right, let's check out Merck, which went from $134 down to $94 at one point. It's been creeping back, but still has not at the $100 mark. Kenny?
No, that's down about 25 or 26%. But again, it's a key name in the healthcare space, right? In the pharma space, they've got a lot. They got 80 trials going on in phase 3. They got 30 trials in phase 3. They got 80 trials in phase 2. So there is a pipeline that's coming. And I think, look, it's another one. It pays you like 3.5% divvy. And it's broken down. It's a decent name. It's a very big name, large cap name in the space. And it's broken down. So again, I like that space for 2025, the healthcare space. And I think that Merck is an industry leader that is on sale at the moment, down 26 or 27%.
UBS has a buy rating, but recently cut the price target to 120 from 125. So they pulled back a little bit, but it's not even at 100 today.
Yeah.
Let's see what Rick Ducat says. Rick?
Yes, another chart that won't necessarily win the chart beauty pageant, I guess, here, but we can see that since we hit these highs, 134.63, we can connect these subsequent highs using our blue trend line here. By that measure, we have started to push to the upside beyond this boundary. Remember, though, trend lines are subjective. It kind of depends on the person drawing them, which way they would choose to do it that they would find more significant. Another trend line could come from this high point right here connecting these highs here. By that measure, we're still within this triangular shape here. We saw another rejection near the highs. Now we're retreating back near the lows below our yellow 21-day EMA. So it kind of depends on your point of view. Both trend lines can coexist at the same time. Neither of them are necessarily wrong. It just depends on your outlook and how you choose to draw it, whether you go along the highs or the closing prices or the lows or what have you. Nevertheless, here we can see RSI exhibiting a similar triangular shape here, going up from this low point over here, connecting these lows, not really able to make a play above that 50 midline here, and also making a series of lower highs. So not really the most encouraging setup here for a bullish momentum trader. If we were to overlay our other studies here now, we can see that we have a similar situation to our last chart, where at these depressed levels, we have very heavy volume here, which suggests people are willing to make plays, perhaps trying to find a bottom in a thoroughly depressed name here. We can see that our low point came in 94.48. That would be the slipping point for further losses here. And then to the upside, we've got our linear regression line, our 63-day EMA, and our trend line pretty close together around like 102 or so. We would probably be looking for this ceiling to break here, this sort of double top area near 105. Then we've got another node near 110.
Right. Okay. Good to see you, and thank you for the look at all the charts, which were less than beautiful today. We appreciate it.
But he did a great job making them look as best as he could.
Always. He looks at all the scenarios there. Final thought.
So listen, I'm just concerned about where the market's going to go, and like I said, these are three big names that you also have to understand where I am in the life cycle, right? I'm a little bit older, and I've got less time to play around. So therefore, I want to put money into names that I think are on sale, that are decent in the sectors that they're in, and will provide an opportunity.
Okay. Kenny Polcari, Slatestone Wealth, great to see you. We
Always
appreciate it. And Rick Ducat there on the charts. Thank you both so very much.